Until last week, India's largest car maker, Maruti Suzuki, was also the most valued auto stock on the bourses. However, on 30th January, this spot was reclaimed by Tata Motors after 7 years as its total market capitalization crossed Maruti's 3.13 trillion rupee mark. In terms of absolute gains too, in the past 6 months, Tata Motors shares rallied 37%, making it the biggest gainer among passenger vehicle players. Maruti, meanwhile, has seen its stock rise only 4% during this period. Tata Motors has been deriving strength from JLR sales and domestic product launches across premium SUVs and EVs. For Maruti, analysts attribute the underperformance to its relatively slow start in the high-demand SUV segment and virtually no presence in the EV space.
Reason for Maruti's underperformance when compared to Tata Motors, the main the concern is their conservative approach in terms of entering the SUV segment and also making the premium products in the passenger line has impacting their market share at this point of time. The large SUVs are concerned around 20 to 25 lakhs. Maruti they don't have a product propositions at this point of time. Maruti have not revealed any kind of their future forward plans towards the electric vehicle segment is concerned. That's where the Maruti is lagging, both in terms of the large SUVs and the EV segment is concerned. Maruti is completely lagging.
Amid rising competition, especially with the launches of premium SUVs, Maruti has been losing market share in the overall passenger vehicle segment. In FY23, its volume share in the PV market was down to 41% from 51% in FY19, while Tata Motors held the third largest spot at 14%. However, within SUVs, Maruti has increased its market share to 21% during April to December 2023 from just 13% in FY23. Analysts still note its launch pipeline is unimpressive as compared to that of Tata Motors.
The launch cycle of Maruti is largely over, and one launch which is expected in next fiscal year is electric vehicle, which will be a key watch point. However, as compared to Tata Motors, the Maruti's launch cycle is largely over, and no fresh launches in the ICE segment are expected. As a result, we expect Tata Motors to take lead. Tata Motors is trading at 15x 12-month forward P against its long-term average of 23x, whereas Maruti is trading at 22x 12-month forward P against a long-term average of 24x. So Tata Motors still has some comfort given its robust outlook in the passenger vehicle and tailwinds from the JLR business.
Thus, with Maruti slowly rising up in the SUV market, its first EV SUV launch in FY25 is a key trigger as its small car sales remain muted amid inflationary pressures. Today, on 8th February, the last rate action will be guided by the RBI's monetary policy outcome and global cues.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
He's making plans for an early retirement. Business Standard.